What's happening mortgage rates, Dan?
Okay, so so I went on to a whole separate thing. I'm trying to okay. So here's the article I teased, and I actually put the quote down to the bottom. But mortgage rates set record low for the 10th time.
What?
Which is insane. Mortgage rates fell slightly this week, setting a new record low for the 10th time this year, Freddie Mac reports. The 30-year fixed rate mortgage averaged 2.81%. That's insane. That is the lowest rate since Freddie Mac began tracking such data in 1971. So if you're like me and you've been saying for your entire career, which started in 2011, no, mortgage rates are historically low. If you go back and track the data, 1991, they were here. 1983, they were here. They're still historically low, even at 7%. Now you can straight up say they are the lowest since 1971 at 2.81%.
That's definitely a different take on that, because I've seen a lot of agents post like mortgage rates are at a historic low, but now you could say mortgage rates are lower than they've ever been since 1971. That's a good.
Since tracking the stat, literally the all-time low. And so the last low was set in September at 2.86. So it's even lower than that. Now, I usually don't cover what they actually are, but I wanted to do it just so we kind of break it down. Then I'm going to hit that quote. Just more suspense for you guys. But Freddie Mac reports the following national averages for the week ending in October 15th. 30-year fixed rate mortgages average 2.81%. Then it gets into the points down and all that stuff. We don't need to cover that. 15-year fixed rate mortgages averaged 2.35%, and they fell a half of point. And then 5-year hybrid adjustable rate mortgages average at 2.9% with an average 0.2 point, blah, blah, blah. So if you want to see more of that, go over to Realtor. It's the Realtor magazine. I don't know what it is, magazine.realtor.com or whatever, but they break that down. But here's the quote. And this is from Nadia Evangelou. She's a research economist for the National Association of Realtors. And she says, with mortgage rates to remain near 3% for the next couple of years, home buying activity is expected to stay strong for several more years.
That's interesting. I've not heard that yet.
This is the first time I've read several more years.
Well, that makes next year's prediction of rates easy, if that's true.
We'll just say 3%.
Yeah. So, okay, let's think of why. Why would it stay that low? Economic recovery.
But several, by the way, is 3 or more.
Right.
So she's saying for the foreseeable future, essentially, that they're going to stay at 3 or below.
Dusty says they really think it will stay that low for that long. Yeah, that's Adam Johnson says 2.35%, 30-year fixed, $1,500 lender fees locked in a few weeks ago. Wow, banks are making money now in the spread than they were last year at a higher rate. Isn't there a rule against them making money on the spread?
Uh-oh.
In there, Adam? I know Adam will look it up. Adam will look it up if there is. I thought there was like some kind of rule about.
He's our unknowing statistician.
Yeah. Dusty Martin says, I call BS, 10-year note slowly ticking up. So why would it stay that low? Fed says they don't anticipate raising it for three years. So they don't anticipate the rate raising for 3 years. But if there's a new administration in place, that could change things.
Maybe. But why would they change things?
Because they want to get more money off the money that is being made on housing. You saw what the what was it? The FHFA or whatever they were. That they were trying to impose that
0.5%, right?
Yeah, 0.5% fee. And their reasoning was, well, rates are really low and people are getting mortgages and we want to make money off of it.
Right.
That's the government bent. So
we're not making any money, so we wanted to make some money.
Probably depends on who you vote for.
And maybe so. Dusty says maybe they are banking on the same guy staying in office, but I just don't know why a different guy. Well, we only have 2 choices. Did you know we're only a 2-party system, Ray?
What? No, there's another. There's someone else. I can't remember their name.
No. We only can choose from 2 people. That's it.
Johnson, I think.
Adam Johnson. No, we can only choose from 2 people. That's it. We are a 2-party system. We don't have a 3rd, 4th, 5th. We don't have any of that. Anyway, but I digress.
Dusty Martin says, I think if the admin changes, shift in the economy. So there's a shift in the economy, but you left out some letters. SHTF. You left out some letters in that. But I think if the admin changes, there's a shift in the economy. That's what she's saying, right, Dan? Adam Johnson says, he says, middleman will be reestablished under Biden. Fed Treasury will be separated again. That's interesting. I could see the Fed Treasury being separated again, and then if that happens, then you could see rates start to tick up a little bit, a different policy. But that's really interesting that they
not shift.
Yeah, I know what you meant, Dusty.
Boom boom.
She said a specific emoji hits the
fan. But all she says though is with mortgage, just straight up, there's no home buyers who are ready to enter the market are rushing to take advantage of lower borrowing costs. And she says with mortgage rates to remain near 3%. So near could be 3.25 for the next couple of years.
I would say like 3.4 would still be near 3, right?
Near 3.5. You're rounding.
3.5 would make it near 4.
But that's still crazy, crazy low. I just hadn't seen that next several years or 3 years. I hadn't seen that before. So I wanted to kind of make a thing of it.
I haven't seen that quote yet either, or the prediction. And I'm interested to see if that's actually going to happen or not.
Yeah. So let's track Nadia Evangelou.
Now who is Evangelou again?
She's a research economist for the National Association of Realtors.
Okay. So she works with us. So apparently she's probably on what's his face? We always reference him.
Joel Kahn?
No, not Joel
Lawrence
Kahn. Lawrence Yun. I couldn't think of his name. Apparently she's on Lawrence Yun's team, right?
Yeah, but usually the quote would come from him, and they circumvented Lawrence and went right to Nadia.
Adam Johnson has a good point. He said big banks are needlessly high to slow refi purchases. That is true. We saw that a couple of months ago. I don't know if they're still doing that, but we definitely did see that a couple of months ago.
It was about when we had Frank Gray on from the Frank Gray what is it? What's their Frank Gray and
Brian. Yeah, from the National Real Estate Post, of which we are featured on their website, by the way.
Thank you very much. Go see us over there. But